G'day and welcome. Bitcoin miners stop selling. Coinbase sees a 1 billion BTC exodus. Tokenized real world assets are going mainstream. Plus Cardano just scored a huge win in Web3 adoption. Big moves are happening. Smart money's already positioning. Stick around as we unpack what it all means and run through the key market signals you need to know today. So yes, we are having a red day again at the moment, but as I said yesterday, we're going to see a few of those. That's to be expected, right? As we can clearly see, the market's beginning to feel a bit different, isn't it? There's already a build-up of institutional interest. There's a cooling of minor selling pressure and signs that real-world finance is warming up to blockchain infrastructure. Even retail-focused tools like the Brave browser are pushing Web3 usability forward. While prices may not be exploding daily, which people really want to see happen right when we get into a bull market, the reality is that's not the way that the bull market's going to run. We will get periods like that, but that's not where we're at the moment. Foundations for the next big leg up are being laid beneath the surface now, and that's what we need to be paying attention to. All the stuff that is coming through, all the good news, not the red day that we get to have here and there. So look, one of the news articles today was Bitcoin miners stop selling, hash ribbon buy signal flashes, right? So what we've had is the Bitcoin miners are significantly slowed down their selling activity, a behavior that typically signals growing confidence in the future price appreciation of Bitcoin. The trend was triggered by a key technical indicator known as the hash ribbon buy signal, which often coincides with major accumulation zone, right? The hash ribbon compares the short-term and long-term moving averages of hash rate. And when miners capitulate and then recover, it flashes a signal that has historically preceded strong Bitcoin rallies. With BTC gaining over 20% since last April's low, that would be the beginning of another strong cycle for price action impact. Like, it signals miner confidence, meaning that they expect the higher prices to come. Its reduced selling pressure can help support like the price stability or the growth of the price. And historically, a bullish indicator often preceding a major BTC rally. So, keep an eye out for that. Keep an eye out for the miners selling pressure. It will be an important indicator for this rally. Okay, so then there's another article, okay? Coinbase sees 1 billion Bitcoin outflow, institutional accumulation. It's likely that Coinbase just recorded its largest single day BTC outflow this year. It was well over 16,000 BTC, worth more than 1.2 billion. It's left the exchange, and we know that normally will mean when tokens flow out of the exchanges, it's for holding and for the accumulation, right? They're not looking to sell. It's when the tokens flow back onto exchanges that people are looking to liquidate and sell their holdings. So it typically reflects institutional accumulation, right? As large investors tend to withdraw assets into their cold storage rather than leave them on the centralized platforms. Analysts believe that this could indicate strategic positioning by some of the larger players, expecting mid to long-term gains, particularly as macro conditions and regulatory frameworks evolve. And we're seeing that, right? We've seen it, especially since Trump's got in, with all the regulatory changes we're seeing, not only at the federal level, but also at those state levels as well, right? And the large outflows from the exchanges, it's accumulation. It's not selling. And it suggests that institutional confidence in Bitcoin, it's at the upside, right? You've got lower BTC exchange reserves, reducing short-term selling risk. So again, red day, positive macro, zoom out. That's I guess what I'm trying to say is we need to continue to zoom out. To take it a day at a time, but zoom out. And then there was the VanEck story, right? And the securitized launch first, the tokenized RWA fund. So traditional finance, it's finally bridging into the blockchain, right? You've got the asset management giants like VanEck and the tokenizing platform Securitized. They've launched one of the first tokenized US Treasury yield funds, right? It offers exposure to real world assets via the blockchain. This means investors can now access yield-bearing government securities as on-chain tokens. Like, that's huge news. Potentially improving the efficiency, transparency, accessibility as well. So many more people will be able to access it. The fund that's built on Polygon network, and we haven't heard a lot about Polygon. Like, that was pretty big, Polygonmatic, like last cycle. But with everything that's been happening with Solana, everything's been happening with Sui, all the stuff on Cardano, all those other blockchains have sort of taken the limelight. But Polygon is still there, and it's still working away. And the fact they've moved on to Polygon shows that. Will that help the Polygon price? I don't know. But it does show that, because Polygon is a layer 2, okay, on Ethereum, and we know, like, we had the Pectra upgrade, so we know that the growing role of the Ethereum scaling solutions in institutional grade products is big. Like, it's a major milestone in bringing TradFi and DeFi closer together. And the real world asset tokenization is a growing megatrend. Like, BlackRock have been talking about it. You now got VanEck in on it. Like, there's no way that we're not going to see the tokenization of real world assets moving forward. And it's only going to grow. So this weekend, when I do my weekly wrap up, we'll have a look at the categories again. But if you actually go into CoinGecko or CoinMarketCap, look at the categories. It's not a massive category considering the size that it can grow to. So there's huge opportunity there. It creates new DeFi use cases for the yield-bearing instruments, and it signals a shift in institutional sentiment towards blockchain tech. And we're seeing that more and more. It's just going to become like common course as we move forward in the next 3 to 5 years. It's the way it's going to go, and I can't see anything stopping it now that we've got that support with the Trump administration, and barriers are being taken down, and they're really pushing to be the hub for crypto. We will see more and more of this, and having the VanEcks and the BlackRocks and Grayscales and that all on board, it's only going to help. There was another article then about Brave browser. So we've all heard of Brave browser, right? Whether you use it or not, don't know, but it's integrated a Cardano wallet support. So the privacy-focused Web3 browser Brave, it's added native Cardano support. So a lot of people might use it in crypto, maybe, like because of that privacy factor. And the fact that it's crypto related and privacy, especially for wallets, could be quite beneficial, yeah. It allows users to manage the ADA directly through the browser's built-in wallet. It makes it easier for everyday users to hold, send, and just interact with the Cardano ecosystem. And the more we see that with Cardano, the better, in my view. It's such a strong ecosystem. It's so much work. It's got such a big community as well, but it doesn't seem to get talked about as much as as Solana does, right? Or an Ethereum, or even Sui at times. So things like this, anything that's going to make Cardano easier to use and easier to access, I think is going to be good news. And the reality is the integrations, it's part of Brave's broader effort to make Web3 accessible, and positions Cardano alongside, like I said, like Ethereum and Solana as top tier supported chains. Its user-friendly crypto tools grow. Like, it's just going to bring more and more mainstream adoption. It's really the way things are going, and it won't stop with Brave as well. Like, it greatly enhances ADA's accessibility for mainstream users. As I said, it adds real utility and exposure to the Cardano ecosystem, which is only going to be good for that community, which, as I said, is absolutely huge. And it strengthens Brave as a Web3 on-ramp, especially for privacy-conscious users. And we know in crypto, for a lot of people, how important that is. Like, they'll use exchanges that you don't have to KYC. They're using VPNs. It's only going to help adoption in my eyes. And again, all these things coming together, all this adoption, this ease of use, this being able to onboard the retail investors and that, it's going to be great for the industry. It's going to be great for investors. So anyone that's here now is still very, very early. But anyway, let's have a look at the market and let's have a look at the indicators for today. Okay, we can see the market cap's at 3.4, so it's down slightly. Volume's down quite a bit, but still pretty strong considering the red market conditions today. You've got dominance still at that 59, so it's still below 60. Ethereum's actually gone up slightly. And then if we look down here, again, it's red. But like I said yesterday or the day before, zoom out, right? Zoom out. You're still getting great 7-day numbers. Is there any big reds that we can see here? Just lots of red, okay? 7-12% for Athena, but that's had quite a bit of growth. If you look out here, it's still doing okay for a weekly perspective. Celestia's 11, Bonk's down 12. So it's red everywhere basically. Fartcoin down 10, and you'd expect some of these ones that had bigger runs recently to maybe pull back a bit harder as well. The crypto bubbles, again, sea of red. But as I said yesterday, look, if we pull out for the week, a lot of green. For the month, lot of green. Okay, so again, we need to zoom out. We need to take things in perspective. I feel we're in that bull run. We're going to get pullback days, but again, it's nothing to worry about at this stage. I don't think. The indicators, we can actually have a look at the indicators here. We can see fear and greed still at 70. The Coinbase app dropped slightly. It was at 220. We can see, market cap and volume I've discussed. We're still in green for the month. And even some of these main indicators down here, some of them, like the pure multiples up, which relates to the Bitcoin miners, as I said. We're still seeing like some strength in that Bitcoin mining area, like for them holding. We can see the new pull and historic risk are flat, and the Pi cycle top, it went from 0.58 to 0.57. So again, it's not sheep stations, it's not panic stations. I still think that things are looking pretty good from an indicator perspective, from a market cap and volume perspective, and even from the dominance perspective. And even the feeling around, like the fear and greed, as I said, and some of the X stuff, it's still pretty positive out there, which is important. Okay, so look, we have institutional interest back from Coinbase outflows to the tokenized asset funds. We've got the miners holding. On-chain signals are aligning with bullish sentiment. You've got major user-focused adoption. Like, it's happening under the radar, but especially with things like Cardano's Brave integration. You've got real-world asset tokenization. And honestly, that is a sleeping giant. I think if like I said, have a look at the categories, and I'll go through them this weekend, and I'll make sure I focus a little bit on the RWA piece of that. You got VanEck moving, like it may mark the start of something really, really big, and others jumping on board with it. So the market looks ready, but corrections will come like today. Smart positioning and DCA strategies remain key. Like, these are the opportunities these are the days when you look around for opportunity in the products you believe in the tokens you hold now, and you may be able to get better entries and bring down your average cost. So that's what you use days like today for, is to look for things like that. But the overall sentiment is still pretty positive for the bull run. So before I wrap up, look, honestly, the red day, it's not the end of the world. And while you should still be excited about crypto, like the market's down, Bitcoin dipping, it's like 1.2%. So it's not the end of the world. Altcoins like Ethereum and Solana, they're taking hits as well. But there are some key reasons why you should still remain positive, right? Just remember that dips are normal. And the reality is, in the bull market, you'll see historical bull markets, we've seen 5, 10, 20% pullbacks. as we go through the market. So this one will be no different. And like even in the biggest bull runs, those things are happening, right? The dips shake out the weak hands and they set the stage for stronger rallies, right? So we need the pullback, we need the consolidation to build that baseline to build on, right? So honestly, it'll be choppy. Q4, realistically, I think is the target. Like that's often when we see the target for the bull run. The highs are often around that, November, December time. The last bull market was a double top, but we still had one in November. Okay, so doesn't mean don't sell before then. Remember to watch those indicators. Like the fundamentals are stronger than ever. The SEC's got a new chair, right, in Paul Atkins. And he's pushing for clearer regulations, which could unlock billions in institutional investment. Plus crypto ETFs are continuing to buy. Like the mainstream adoption is growing and there's a massive long-term win coming for us. Innovation keeps driving growth and like the innovation isn't slowing down. Projects like Avalanche and Hyperliquid, like you go onto X, they are trending on X. And they're DeFi and scaling solutions. You've got Ethereum's Petra upgrade that we just had. You've got the Crescendo for Casper as well. Like that was huge, going from 1 block per second to 10 blocks per second. So, XRP's volume spiking in Korea, like there's so many things. If you get on and read the news or follow X, you're going to see all these positive things that are happening. Yes, there are people fighting on there. There's always going to be bears in the marketplace. You need to do your own research. Look at the broader market, zoom out, look at the indicators and make your own decision, right? But for me, the developers mean crypto, it's not just price, like it's the utility. That will drive the price as well. If the product's good enough, the users will come. And although crypto's not fully in that utility phase, there is a lot of gambling, if you like, and a lot of tokens will go to zero and a lot of tokens will lose 90% of their value in the next bear market. The reality is every cycle and every year, the use case gets better and better for crypto and the adoption gets better and better for crypto. So you're still very early, right? But anyway, that's it for today. If you found this video useful, hit the like button, subscribe for more crypto updates, click the bell notification so you're notified when I release a video, and let me know in the comments as well which story you think will have the biggest impact, maybe some of the things you'd like me to cover, and I'll catch you in the next one.